Hello everyone, and welcome to the post-market analysis for the Nifty 50. Today was a classic example of a market caught between competing forces. Our morning prediction of a flat positive to very negative session played out almost perfectly, as the index struggled for direction and ultimately succumbed to selling pressure. Let's break down the key levels, the price action, and what it tells us about the market's current sentiment. Key levels or the morning setup. First, let's look at the framework we had going into the day. The second chart provided us with a very clear roadmap of support and resistance levels. The key pivot point was around 25,910. Notice that this was precisely the level indicated as the sell and buy trigger. Above it, the path was open towards the resistances, starting with R1 at 25,990. Below it, we were looking at a slide towards S1 at 25,835. The major resistance cluster was between 26,065, R2, and 26,297, R6. On the downside, a break below S1 would open the door to 25,765, S2, and even 25,685, S3. This was our playing field for the day. Analyzing today's price action, now, let's overlay today's actual price behavior from the first chart. The Nifty opened with a gap up, touching a high near 26,052. But look at that level, it ran straight into the first major resistance wall we identified, R2 at 26,065. The index tried to breach it but failed. This rejection at resistance was the critical moment of the day. It confirmed the lack of strong bullish conviction and triggered the very negative part of our prediction. From that high, the index began a consistent decline. It sliced through the key support at 25,910, which turned from a potential support into resistance. The decline continued, breaking below S1 at 25,835 and eventually closing near the day's low at 25,894.70. While the net change was only minus 0.40%, or about 103 points, the intraday structure was bearish. The market formed a classic, lower high, compared to recent sessions and closed weak. Market sentiment or technical implications. So, what does this tell us? A. Respect for technicals. The market respected the predefined resistance and support zones with remarkable accuracy. The failure at R2 and the break below the pivot point were clear technical sell signals. Though, lack of follow-through buying, the gap up opening attracted sellers, not buyers. This indicates that at higher levels, participants are more inclined to book profits than to initiate fresh long positions. Shift in sentiment. The close below 25,900 and the key pivot level shifts the short-term bias to negative. The immediate outlook now depends on whether the index can defend the next supports around 25,765, S2. A break below that could lead to a sharper fall towards 25,685. What to watch tomorrow? For tomorrow's session, traders should watch these key levels. On the upside, the immediate hurdle is now the previous pivot at 25,910. Any sustained move above this could signal a rebound. The bigger challenge remains the 26,065 to 26,100 zone. On the downside, the crucial supports to watch are 25,835, S1, followed by 25,765, S2. A break and close below S2 would confirm a deeper correction is underway. Global cues. As always, keep an eye on overnight global markets and any fresh domestic triggers. Conclusion. In summary, today was a technically driven day that fulfilled a cautious to bearish prediction. The rejection at a key resistance level and the subsequent sell-off highlight the current fragility in the market. The burden is now on the bulls to defend the lower supports. Until we see a strong recovery back above 25,910, the path of least resistance appears to be sideways to negative. Thank you for listening. That concludes our analysis.